Hello, welcome to another daily recap. Today is Wednesday, April 24, 10 minutes in front of 9 o'clock, almost 10 minutes in front of 9 o'clock. So the market opens in 40 minutes. These are the levels that we're going to trade against in the E-mini futures. So just to point out a couple things, this dotted line here is, I'll show you in a minute where it comes from. It's not a formula-derived level. It's just as high as the pre-market got to before they fell away. And if you recall, yesterday we had a level at 506.70, 506.70. So they were fighting this level, trying to get above it most of the pre-market, and they did. They spiked up here. Maybe I'll just turn on the after hours chart so you can see it. And then other levels are relatively close together. So, I'm going to be treating these a little cautiously, maybe one contract at each level and then scale in. And also, I want to take a look at just show you some longer time frames, just to show you where we are in the big picture. First, just to point out that this lighter blue line here, I showed you in the post market, they came up to it. It was kind of important. This is the line that was one of the levels on the chart yesterday, and so they've been playing around this most of the pre-market, and they spiked up to this 507.60, and they've got back below 506.70. So this level is not a level for today, but you can see what they did in the pre-market. So I'm just going to keep an eye on this if they get back up there. It wasn't hardly any volume at all when they spiked up there, so it's less important, but just want to keep an eye on it. And let's take a look at some longer time frames. Nothing more than just bringing awareness to where we are, starting with the weekly chart. Remember 518.50, that was above this doji candle. The amount of time it took them to get to that point was important, and they played around, kind of faked us out for a couple weeks, but they got below. Well, where'd they go? They bounced off the 20-period moving average end of last week, so they're climbing back up this week, and I can just go right to the daily chart from here. So on the daily chart, they got below the 50 and came up short of the 100-period moving average, and they're on the way back up. And volume hasn't been tremendous. This is a little skewed here. Let's see if I can clean this up a little bit. So volume is just below average. This is a 90-day moving average for volume, and on all the lower time frames, like say a 4-hour chart, for example, which is 240 minutes. They're below the 50, the 100 and the 20 came up short of the 200. One thing that's interesting is the 180 or the 3-hour chart, which is a little unusual, but that was kind of the tell for a couple things in the last week or so, because here was the 100-period moving average that provided a fair amount of support. I mean, in here is a lot of small trades, like they would have bounced here several times. That was a pretty good area. It's a breakout area from before they got below, and they're trying to fight it to get back above. So just want to point out some of these longer time frames so we can get an idea where we're at in the bigger picture. So back to the 1-minute chart. And this is not the trading screen, so I don't have the levels drawn on this, but let's jump back to it right now. So we'll just come back to this chart after the market closes to analyze all the trades taken in the E-minis based off of these levels. See you then. Okay, it's pretty late, 11 o'clock p.m. I'll try to make this quick. So here's what the market did, and I will show you the recording of 2 trades. First trade is when the spiders hit 505.65, coming down into it. That was a long trade. Another long trade down here at 503.48. Both were simple base hits. I kind of tried to get creative and took a base hit off on each one, but I also trailed the remainder of the position. I took 2 here, 3 here. I'll show it to you. But so just to point out here, with the 5-cent buffer, this was precisely at 505.70. Long trade there, got 4 points, more than enough to pull up. And down here, they came up close a couple times, but per the rules, this would have worked out. It did work out. Again, I'll show you the trade that I took, and that was a base hit, and I wanted to trail it up more. I thought it did take some time, but once they found the right support that they needed, they did go up, but I was already out of the trade by the time this bigger move happened. So we'll take a look at the recording, and we'll talk through it then. So I have this recording queued up to right before the spiders hit the level. I had a limit order of 2 contracts to buy, and I'll start playing this, and you'll see that it was filled. And instead of taking 2 contracts off at the base hit, which would have been the smart thing to do, I took 1 off. So instead of getting $400, I got $200 there, and thought I'd trail the other half for more points, but they didn't bounce there. And this is probably a good lesson to show here. While it's not as sexy to just take a base hit off and just get a small little scalp trade, it's kind of nicer and funner and more, funner is not the right word, but you know what I'm saying, more interesting, more exciting, sexier to have a trailing part of the position that goes up for another 15 or 20 points. It just doesn't happen as often, as evidenced by this trade. So I took half off, took one of the two contracts off, $200, but I jumped out when things were not looking great. And I realized, let me just stop here and I'll talk through this through. That was the trade. And so, when it's below the fumble threshold, which it gets to in a minute, I'm looking at thinking, well, why did I do that? I should have just taken the base hit off. There was no real good indications that this was going to be a great position or great level to take a long trade at and trail it for more points. So I jumped out. So basically wiped out most of what I earned on that trade. Well, more than what I earned. So I started the day off negative at this point. It was like negative. So what was it? $200 for the 4 points on the one contract, and then I lost like $330 on the failed trailing position. As you'll see momentarily, as soon as this number disappears, it means I canceled the position or closed it out at the market and incurred that loss, which happened right there pretty soon. So then I'm going to jump ahead to the next level down. Let me speed up. 50. Back up to where before it starts. 503.53. There we go. Adjusted the chart. So once again, I could have taken a base hit off. I went long 3 contracts, and I did take 2 off. 2 of those contracts off of the base hit, so $400, and that worked out pretty good. You'll see that. So I'm back above water. Everything's great, but I wanted to trail the remaining contract for more points. And once again, it didn't give it to me. Ultimately, they found the support they needed. This was the place where the trend stopped and changed direction. But that trailing stop I had right there's one contract going to trail in it. I pulled it up above, like a tick or so above the entry point. So I was positive, 1 tick when it stopped me out. So nothing lost there, but I could have just taken the entire thing off. And that's just where the point to drive home here is, more often than not, if you go in and out, like all in and all out at that 4-point base hit profit target, you end up getting more. And this will become more evident when we look at the tracking log. So you see here, I have taken 2 of my 3 off. I'm trailing 1, and this was my target up here. And they've started coming up, but they didn't get that high, nowhere that high, at least in this run. Instead, they came back down, stopped me out at the 1 tick, $12.50, and I'm out of the trade at that point. So nothing more to see here. I can scrub ahead just to show you. Just stop the recording because that was it. Let's jump to the tracking log, and we'll talk about how this quantifies into profits for the day. Playing by the rules, 2 base hits. The first one at 505.65, and the next one down at 503.48. Just if you would have grabbed the 4 points when they handed them to you, you would have had 8 points. Instead, I got my base hits of 8 points, but because I tried to trail and then it ended up going against me and I jumped out the negative, I lost 6.25, so I did not make as much money. So just the differences, playing by the rules, ignoring the rules, and trying to be creative, and end up giving some points back to the market. We're not taking this much out of the market. Probably this more accurate way of explaining it. But anyway, those are the 2 trades that were on the board today, and they worked, or the 2 levels that were hit, and they worked out pretty well. I just need to stick to the rules, and hopefully there was a lesson learned here for those of you watching. Hope you enjoyed the video. As usual, consider subscribing if you haven't already. Thanks for watching, and have a great day.